Hey, hello everyone, I hope you're all doing well. My name is Marcello Kolax and you are watching the weekly technical analysis outlook for the European energy markets, and I can't believe that the first quarter is already over. Like, seriously, what happened to time? Okay, so I will not keep you from the charts, so I'll just jump right into it. But just a little disclaimer, so of course nothing that you see here is actual trading advice. It is just my humble opinions. Of course you shouldn't trade based off of what someone says on the internet. Okay, next thing is let's have a look what actually happened last week. Nothing. So if we are looking into the intraday charts, we can see that most markets are actually reasonably neutral and they're all contained within their respective ranges, at least on the TTF, on the German power markets, and on the NBP. So you can see here that nothing is really happening on the hourly end, of course therefore on the daily charts. So this is the result from last week's poll, and interestingly the bullish sentiment has subsided quite quickly after we had, I think it was like 2 weeks ago, we had the update from Zuza, the Russian gas metering station or pumping station that was bombed once more and was back then deemed as destroyed. Some traders thought it's a big deal, others thought not at all. So the shift has moved now from mostly bullish to evenly split. So this is really interesting because it's also reflected in the charts, right? Remember, on the TTF, NBP, everything is sideways, and the market also seems to agree with that. So this is ideal for momentum traders, because what we're doing now, if the market is like fully neutral, what we can do now is we can be working with clearly established ranges that tell us when the market is pushing higher, so when the bulls are winning out or when the bears are winning. Sounds good, right? So now let's move into the charts, and I'll make myself even smaller. There you go. Okay, so on the TTF, as we can see here, this is the NBP front month, this is the TTF front season. Here we have the NBP front season, down there is EUAs, then we have German power, we have Henry Hub, and we do have Brent right there. Okay, so as we can see, the market has been moving into a smaller and smaller ranges. The up legs aren't as strong anymore, so the bulls are not winning out, but the down legs are a little bit lower now. So are the bears winning? No, because we're still not making lower lows. The result, a neutral market for most of them. The only market that has come off significantly is EUAs. That is a little bit more clear. You can see here like smaller and smaller ranges on the TTF. Where are we going? But on the EUAs, it's a little bit more clear. We just have one up leg and one down leg. So this provides a little bit more clarity that we'll talk about in just a moment. Then we do have German power, where we still see that the bulls have been pulling through. You can see this up leg here was shorter, and then the up leg went longer. However, the market has declined significantly, and as long as the correction is playing out, yes, the market is neutral, because this should be an uptrend with higher highs and higher lows, but right now we are in a sideways trend. Okay, on the Henry Hub, we are drifting lower marginally, but overall nothing really has been happening. We are overall making lower lows and lower highs, but the corrective up legs are not really convincing. Can you see it's there's nothing really happening. Here we are even just going sideways. On Brent, fairly interesting. We have been pushing higher and higher, and higher, but there have been some indications that we are due for a corrective move lower. I will be hosting a special technical analysis masterclass at the X Energy Exchanges conference in Athens, and I will also be hosting a technical analysis masterclass in Amsterdam at Flame. So if either of those interest you, then do sign up in the link below. And now let's get back to the markets, shall we? Alright, now let's move into the details, and we start as always with the TTF front month. Okay, on the TTF front month, on the weekly chart, we are still dealing with this broadening wedge where the price is moving into an increasingly wider range. This is very, very tricky to trade, because in comparison to a normal channel, so on a normal channel we would have our support levels and our resistance levels, and we would be able to say, here's a good to enter, and then we move until here, and then we have a corrective move, and then we move until here, right? In a broadening wedge, we see that the bulls and the bears are increasingly more convinced. So that means the up legs are getting longer and the down legs are getting longer. So whereas, let's say from a bullish trend, we would get an early price break on the channel, right? If the channel support breaks, we get a nice clean bearish signal. But on a broadening wedge, before like a downtrend signal is generated, the market has to move a significant portion. So that's why these patterns are really tricky to trade, broadening wedges. So instead of trying to derive any signals directly from the broadening wedge, we try to move into the lower level time frames. So here it would be then the daily chart in just a second, and we would then be dealing with the smaller swings and capitalize on them. So what's happening? So on the broadening wedge, we have found support, and it's been 1, 2, 3 weeks now after a touch. So let's say 4 weeks, and nothing is really happening. The tools don't show us anything new, and we are within the range. So I put on these Fibonacci retracement levels here that help us to establish at what point the market is actually continuing higher. So here it would be 45.18. Above this level, we would be having a bullish confirmation that the market is actually pushing higher. Some people might take this high at 45.49. So on the daily chart, on the TTF, we are dealing with a Fibonacci extension. So you can see I didn't even put on the retracement for now. So extension simply means that this down leg after the correction will be continued lower, right? That's the whole idea, because looking at the lower peaks on the stochastic, for example, and still the bullish dominance on the DMI. Yes, of course, the MACD isn't as bearish anymore, so the bearish momentum isn't really there anymore, but it's still a far cry from being bullish. So that's why right now the idea is rather to maybe dip a little bit lower. Whoop, there you go. Maybe test the support of the broadening wedge a little bit more, but right now neither the bulls nor the bears are like truly in charge, and I want to see a move past this peak or once again below this low here that was hit some time ago. All right, cool. Whoop, now I'm moving this thing. There you go. All right, and on the TTF hourly chart, here we are still dealing with this range, 43.76. Not like this, and 40.15. So if you're so inclined, so within that range we are neutral. If you're so inclined, you could move a little bit closer. You could move the resistance level R1 to down here at 41.64. You could, if you wish, put R2 at 43, and then R3 at 43.76. Why would anyone move these a little bit closer? Because this would tell us when we are no longer, or when the bears have lost the marginal dominance on the hourly chart, because you can see we have been edging lower since almost like 2 or 3 sessions last week. Towards the second half of last week, the market has come off and we are making lower peaks and lower lows. So if we were to break above 41.64 at the start of this week, then we could easily test the 43.76 again. However, looking at all the tools, it's looking rather bearish to me. So there's a good chance for this whole thing to be resolved lower, below 40.15. Now here's the thing, if the hourly chart's range is resolved to the downside, then we would very easily start testing this support level, so this broadening wedge again on the daily chart. But even with that, the idea is still for the market to bounce eventually. So just because we get a bearish resolution on the hourly chart and we drop a little bit lower, doesn't mean we are like full on bearish on the daily chart as well, right? So for the bears to regain control, we really have to push below the broadening wedge, maybe even below what is this here? 36.40, which is this trough, right? By the way, have you noticed that this trough here somewhat aligns with the broadening wedge support, right? So it's a double whammy. My name is Marcello Colax. I'm the managing director at Clever Markets. If you do have any questions, simply get in touch with me. And yeah, I am here to help you out. Everyone, have a good start to the week. See you around and bye-bye.